Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 3rd of February and it was a very rough day in the markets today, at least at the open. The markets actually opened on a gap down and that was primarily because of global cues. Our budget was actually good. It was well taken, well received. All the consumption stocks had gone up on the budget day. But then came the tariff hit from US on Saturday night and it turned around everything. And now there is a tariff on Canada, Mexico, China, everywhere, and the world markets are reacting. Our market is no different, and we are also down. But we have made a good recovery, so which is the good news for the day. And I will take you through what exactly has happened today and what the outlook is going ahead for the particular week. So we will start off with the Nifty chart. This is how it looks like. This is on the intraday basis. As I said, we opened with a gap down. We were at 23,300. We touched 23,220. And then from there we rallied. So there was a sharp recovery intraday and we are going to close down, but there has been a good recovery. Now, if we see the same chart on a intraday on a daily basis, on a daily time frame, so you can see it's a D 1 day time frame. So over here you will see this particular range which is not leaving us. We had thought firstly initially that we have gone below this range on 27 January. Then yesterday we thought that we have broken out of this range. On 31st January we broke out of this range on the upside. Now we are again back in this range. So this range is not leaving us of 23,000 to 23,500. Now let us see where we go. So today was encouraging. As you can see, there's a slight green candle getting made in spite of the huge global pressure that is there. So I would take it with some positivity until unless we do a self goal, we score a self goal somewhere with some policy action or something else that is unanticipated in the market. I think we should be, it looks like we are okay, though I will take you through all the other data as well in terms of how the option data etc is looking, but nothing to majorly worry right now. Yes, there is a lot of corrections which have happened within the industries and I will take you through that. This is the situation within the industries. So if you look at this is from 52-week high, how the situation is. So Nifty IT is the least hit at -8%. Fin Nifty is at -8% again. Nifty Bank is at -9.5%. Nifty is now at -11%, so that is slightly down. FMCG has recovered, it is at -13%. It used to be at -17, 18 at one point in time. Small caps are under pressure, so small caps are now down -15%. Nifty Next, which has a lot of momentum names, is down -20. And then the laggards of the market, which is the PSE at 26% and media etc, PSU Bank 24% and so on, and the VIX right now is down about 54% from the top. So this is how the indices are stacked up. So you can see that there is some sort of recovery that has started to come in names such as financial services, Nifty and Nifty IT, which have kind of outperformed the market, and markets are also slightly up from -13.5% that they had gone. So they are now at -11%, which is actually good news. Now let us see how the indices performed for the day today. Now if we look at what is happening is that you can see over here the worst performing ones is the public sector, enterprise, energy, metal. Why is this happening is because yesterday, as in the budget, you would have seen that there has been a tremendous allocation that has been taken away from the capital expenditure side. So about 1 lakh crore has been taken away from there and 1 lakh crore has got into the consumer's hands. And there has been no increase in terms of the capex spending etc. Now all these public sector enterprises are largely dependent on the capex, government capex. Now if that is not going to happen, then their growth compared to last year obviously slows down, and hence you are seeing that these stocks which had gone up 5x 10x in the last bull run of the last 2 years are now actually correcting the most. So that is why you see these indices actually going down the most in compared to all the other indices, and that is continuing even today. It started yesterday and it is now also continuing. So infrastructure is down 2%. Small caps is another area which I'm going to talk about in the end, that why one should be very careful about it. Today even FMCG names etc are down. So all the things are down today, but from where it started, there's been a lot of recovery that has still happened. So Nifty, as we speak, it's almost 3 p.m. right now, is about minus 0.6%, which is pretty okay. And banking is of course outperforming today. Pharma is outperforming. Autos is doing well, and it is quite understandable. That is because of the budget. Of course, as people are going to get more income there in their hand, they're going to spend more on things like autos, discretionary, consumers, etc. IT is up because of course our currency is down, and VIX is up because there has been a lot of turmoil that has happened. So this is how the indices are stacking up. Now let us come to how the other Qs are. So in terms of the open interest, this is the open interest for Nifty. We are at about 0.74. So there are about 21 crore calls and 15 crore puts in the system. Not This is not bullish at all. This is slightly bearish, but I would not read too much into it. Let's see how things pan out going ahead. If we look at how the straddle today played out, so today was a very good day for option selling. Surprise, surprise, because there was a huge decay that came in. So once immediately after open, you can see that there has been a good decay. So Nifty opened at around, I think if I'm not wrong, 260 odd, and there's been a 30-40 point decay that has happened. So which is great news. And similarly for Bank Nifty, there was a decent decay that happened. So straddle after opening actually has decayed well. So there has been decay now for 3 days continuous in the straddle prices, and that's what I have been talking about, that the period from Jan 20th to 30th is very, very tough for option selling. After that, things do ease out, and that is what we have been seeing for the last 3 days. I missed out on Friday. I have no qualms in accepting that, but Saturday I made full use of it. Today I made full use of it. So things are on track. Now let us see till when do they go on track. When does the volatility hit back? It is going to hit back because volatility does come back. We just have to see when it comes back. So that is in terms of how the option data is looking like. Now let us come to the international cues. This is where the entire turmoil actually started. So if you look at the futures of Nasdaq, they are about 1.76% down. Bitcoin is down at 95,000. It had gone to some 91,000. So from there it has recovered a bit. Dollar index is at touching 110. So that is not good news, and that is immediately because of the tariffs that have got imposed. Brent oil is at 76.38, so that's kind of in range, and USD INR has broken 87 easily. I mean, there was like not even any spot of a resistance over there, and it is fine also because when the global currencies are going down, there is no point defending the currency too much. Gold is making again all-time high. So this basically shows how gold is inversely related to the equity markets. So all the equity markets are going down, Bitcoin is going down, but gold is up. Gold is holding its own. Silver is also up. So which is like a great news for people who have their portfolios hedged. Now just coming to a couple of other points that I envisage going ahead into this year. So there's a beautiful interview by Mr. Naren. I was just hearing that, and I have shared it on my Twitter timeline as well. He was saying a couple of things which I completely agree with. One is that this probably year is going to be the year for large caps versus small caps. So I tend to concur because large caps and quality names this year look like they're going to outperform the small caps. There's been too much froth in the small cap, mid cap segment, and even after this correction, it's actually hardly corrected. 15-20% is not a correction. Even after that, they are very, very expensive. So my picks for going ahead into this year are going to be large caps, quality. Another thing is that one should not compromise, as I said, on the growth aspect as well, along with quality. So you will look at stable names, because let's say if you get into names which are very good quality but don't give you any growth and still are available at 60-70p, then also you'll be stuck. So quality first, of course, but quality with some amount of decent growth and decent valuation. So that is how one should approach their portfolio going ahead. And another very important thing is that you should have some sort of fixed income exposure as well, because fixed income is giving good returns. So if anyone is investing in gilts or long duration bonds, then over there you get decent returns as interest rates go down. So that should be there as a part of your portfolio. That just reminds me, I also help clients build up their portfolios for mutual funds. So in case anyone is interested in terms of figuring out how to go about building up their portfolios and how to go about buying mutual funds, which are the right funds to buy, etc., they can contact me on the contact given, and I will be very happy to help. If you just want to share your portfolio and discuss that that I'm fine with that as well. I can give inputs on that, those things as well. So yeah, so that will be my view going ahead into next year, how things might pan out. And this tariff war is something that is just starting out. So let's see how this takes shape. 25% tariffs on any country is huge. And right now India is spared, so which is good. Now let's hope that these kind of tariffs don't hit us, because otherwise there's going to be adverse reaction from our end. But vulnerable countries like Canada, Mexico, European Union, they are very vulnerable to any tweaking by US, so they will react, and that is what we are seeing in terms of the markets also. And the direct impact of this is going to be that USD is going to appreciate, and the moment USD appreciate, the outflows from emerging markets starts. FI starts to pull more money out. So it's a vicious cycle, which needs to be broken with a virtuous cycle, hopefully, of our earnings increasing. If that happens, then a lot of things will smooth out. So that's it from me now. The week is looking slightly tricky, but the way we have held up today is good. Now, until unless there are further triggers or further bad news, looks like we might stabilize. But 23,300 is very critical level for us to watch out for. So that's it from me now. If you like my content, please do subscribe to my channel, and please share it with your friends, family, WhatsApp groups, and please ask your friends also to join and subscribe. So that'll be good. So thank you so much. Have a nice day. Bye bye.